This afternoon, 7 on Your Side investigates what happens if the California Fair Plan, that's kind of the last option plan, goes under in the wake of the devastation in Los Angeles.
So specifically here, what impact might it have on every policyholder in the state, including us in Northern California? And 7 on Your Side, Stephanie Sierra is here with more on that. This is a complicated situation.
Very complicated, but both those questions are key in this. As we know, Wells Fargo and Goldman Sachs estimate the insured losses from Los Angeles are now around $30 billion. So we wanted to know just that. If the California Fair Plan goes bankrupt, what does that mean for the average California consumer, and how likely is that to happen?
You can bet that if the Fair Plan goes bankrupt, and it's a good bet it will, the insurance companies are going to come after us to pay the debts that they owe.
The California Fair Plan, the state's insurer of last resort, said this week it has payment mechanisms in place to make sure all covered claims are paid. Yet over the last 48 hours, new questions are being raised about its financial stability.
But they only have about $300 million in the bank and $2.5 billion in reinsurance. So you do the math. If Pacific Palisades was totally blown away and they're exposed for $6 billion there, they probably have full exposure.
Jamie Court, the president of Consumer Watchdog, says since 1968, when the Fair Plan was created, the legislative assumption was that insurance companies are on the hook for the full cost of damages. But he says that changed this past June.
The commissioner issued a bulletin in the end of July that says after companies pay another $1 billion out to refill the Fair Plan if it goes insolvent, then policyholders are on the hook for everything after that, which is just crazy.
So what does that mean for every policyholder across California?
And that is a big bill. Let's say there's $10 billion that the Fair Plan needs to have repaid. $10 billion divided by 10 million policyholders, about probably how many homeowner policies there are, comes out to $1,000. So are we all going to be paying $1,000? It would be outrageous.
That figure is likely on the high end, and the truth is we don't know the full price tag the Fair Plan will face. But there's no question we'll all be impacted.
This bulletin exists.
As for the bulletin,
absolutely terrible idea.
There's questions as to whether it's even legal.
It is contrary to the intent of the law and subject to being overturned. You simply ought to reverse it.
So we'll see if that happens. But I do want to point out, Amy Bach with United Policyholders says the cost to California consumers is not set in stone and remains a remote possibility. So we'll see how this all shakes out. According to the bulletin, the insurers that make up the Fair Plan will need to request the commissioner's prior approval to pass on the cost to policyholders. As for the Fair Plan's financial future, a big factor will be determined by the liability of the utilities. We already know Edison is being blamed for the Eaton fire, so if other utilities are blamed, that will pay a factor in the future for the Fair Plan.
Right. I mean, you hope that it would be federally backed or something so that if Fair does go under, and then you also wonder, will these insurance companies just say goodbye to California altogether?
Of course, that's the big fear here. So, we'll be on this for the foreseeable future, of course, tracking what happens.
And this was preceded by thousands of policyholders having their home insurance canceled.
Yeah.
Yep.
So there's a lot of people that don't have the money to rebuild.
That's right.
They're going to need help.
We're all affected by this. Yeah.
All right. Thanks, Steph.